All right, let's dive right in. Today, we're going full on detective mode with one of the biggest names out there, NVIDIA. Its stock chart is telling a really interesting story right now, and we're going to try and decode it piece by piece. So, here is the big mystery we're trying to solve. For the past few days, NVIDIA's stock has just been stuck. It's moving sideways, not really going anywhere. You can think of it like a coiled spring, just building up a ton of energy. And the question everyone's asking is, which way is it going to snap, up or down? So today, we're going to hunt for clues to figure out where it might be headed. So let's open up the case file on NVIDIA. We're going to treat this just like a real investigation, starting with the basic facts of the case before we dig any deeper for the hidden stuff. Okay, Exhibit A, as of January 17th, 2026, the stock closed at $186.23. Now, a single number like this doesn't tell you the whole story, but it's our starting point. It's the scene of the crime, so to speak. Now check this out. Look at the closing prices over the last week. The stock is basically treading water, just bouncing around in this super tight channel. This coiling action is exactly why everyone's paying such close attention. See, when a market gets this quiet, it's often the calm before the storm. So what are the first clues telling us? Well, to figure out where we might be going, we gotta know where we've been. Let's take a look at the trend indicators and see if the bigger picture is bullish or bearish. And bam, right away, we've got a bit of a contradiction. The long-term story looks pretty good. It's bullish. The price is above its 200-day moving average, which is kind of the classic sign of a healthy, long-term uptrend. But the short term, it's a completely different story. It's a mess. The price is all tangled up with the short-term averages. There is absolutely no clear direction right now. And if you want some cold, hard proof of that, look at this number. This is the Average Directional Index, or ADX. Just think of it like a trendometer. Anything below 20 means you've got a weak trend or maybe no trend at all. And we're at 11.92. That's basically telling us the market is asleep. There's no wind in the sails pushing the price one way or the other. All right, so the trend is a mixed bag. Let's see if we can find a hidden force somewhere else. Next up, we're going to investigate momentum and volatility. We're looking for any kind of pressure building up under the surface, from either the buyers or the sellers. First, we check the momentum with the RSI, the Relative Strength Index. It tells you how fast and how far prices are moving. Over 70 is considered overbought, and under 30 is oversold. So where's NVIDIA? 51.79. I mean, you can't get much more neutral than that. It's sitting right on the 50-yard line. Nobody's in control, not the bulls, not the bears. It's a stalemate. Okay, now for volatility. Now, don't let the flat price fool you, because something really important is happening here. The stock is in what technical analysts call a Bollinger Squeeze. It's what happens when volatility totally dries up, and these bands, which measure how far the price is straying from its average, they just squeeze in tight. So why do we care about a squeeze? Because it's that coiled spring we talked about. Low volatility never lasts forever. The market is just bottling up energy, and a squeeze like this is almost always the prelude to a big, explosive move. The only problem is we still don't know which way it's going to go. This brings us to what might be the most critical piece of our investigation. The price is flat. Momentum is neutral. But the market is coiling. To crack this case, we have to do what all good detectives do. Follow the money. Let's see what volume is telling us. And this, right here, is where things get really fascinating. Sometimes the most telling clues aren't in the price itself. That can be deceiving. The real story is often hidden just beneath the surface, in the volume data. We're talking about money flow, which can show us if the big players are quietly buying or selling, while the rest of the market is just watching the pain. And there it is, our big aha moment. This number is from an indicator called the Chaikin oscillator. It basically measures the flow of money into and out of a stock. And just look at that number. It is deeply negative. We're not talking about a little dip here. This is a seriously dramatic reading. So what on earth does that mean? Well, it's a potential warning sign. A big one. A negative reading this strong suggests that while the price has been going absolutely nowhere, a lot more money has been flowing out of the stock than into it. The technical term for this is distribution. It basically means that even though the price looks calm on the surface, someone, maybe some big institutions, could be quietly selling off their shares. This is our smoking gun. Okay, we've got all the evidence on the table now. A confusing trend, zero momentum, a market that's coiling up tight, and a major clue from the money flow. Let's put all the pieces together and see what the final verdict is. So, let's do a quick recap of the case file. Clue number 1. The long-term trend is up, but short-term, who knows? Total wash. Clue number 2. Momentum is dead neutral. Clue 3. Volatility is super low, which tells us a big move is coming. And the smoking gun? That really negative money flow, hinting that sellers might be lurking in the shadows. So, with all that in mind, the final verdict from our analysis is this: neutral consolidation with a bearish bias. Neutral because, well, the stock is obviously stuck in a range, but bearish bias because that hidden selling pressure we found, it's just too big of a clue to ignore. So, what do you watch for next? It all boils down to these key levels. Think of it like a battleground. You've got resistance, the ceiling, up around $193. And you've got support, the floor, down around $178. If the bulls can push the price decisively above $193, that's a huge win for them. But if the bears break that $178 floor, that could be the trigger that finally unleashes all that pent-up energy to the downside. And that leaves us with the million-dollar question, doesn't it? We have this market, this coiled spring just packed with energy and ready to explode. But we also have this very sneaky clue that sellers are quietly at work behind the scenes. So what wins out? The strong long-term trend? Or does that hidden selling pressure finally cause the spring to snap? Down. As always, the charts will tell the final story.